value of your name, fame and reputation, right? Sanjay is doing business from last 50 years. So it means Sanjay business is having name, fame and reputation in the market, right? People are trusting on him. That's why people are buying goods and services from him over a period of 50 years, right? So that name, fame and reputation in terms of value, in terms of rupees, is nothing but goodwill, right? So goodwill is a tangible asset. Goodwill is nothing but name, fame and reputation of the business, right? So value of name, fame and reputation of your business in terms of rupee is nothing but goodwill, right? So we are here to calculate goodwill of the business, and there are different methods available by which we have to calculate goodwill of the business. So methods like average profit method, weighted average profit method, of super profit method, annuity method, and capitalization of super profit method. So there are different methods available for valuation of goodwill, and we are going to see different methods by which we are goodwill, right? So first method name is average profit method. So what does it mean? What is meaning of average profit method? See, average profit method is nothing but how much profit on average you are earning every year, right? For example, Sanjay, you are scoring from last 5 years, you are scoring 80%, 82%, 83%, 78%, right? 75%. It means you are a student who is scoring on an average 75% to 80% of marks, right? If I give you example that you are scoring range is 75 to 80 from last 5 years in the 11th standard, in the 10th standard, 9th standard, 8th standard, and 7th standard, you are scoring 75, 78, 81, 82, right? Such a kind of percentage you are scoring. So what is average? On an average, you are scoring somewhere around 77%, right? So that is 77% of the marks that you are getting on an average in every year, right? From here onwards also, from 12th standard onwards also, I can say Sanjay is 77% student, means his average score is 77%, right? So that is average that we know. So here what I'm doing, I will be seeing past profits of the business. I will be checking past trends of the business, past profit of the business. By considering those past profit, I will be finding average profit, right? So I will be finding average profit. For example, last 5 years profit are given to me 10,000, 20,000, 30,000, 40,000, 50,000, right? I will be adding them, divided by number of years 5, I can get the average profit, right? So that average profit, it meaning is on an average, company earns this much of profit every year, right? This is the capacity of the business. Sir, I told you a capacity of business, name, fame and reputation of the business is nothing but goodwill of the business, right? So how much profit you are earning each and every year, how much profit on an average you are capable of earning, so that is nothing but name, fame and reputation of your business. Yes or no? If your business on an average every year, if your business is capable of earning 40,000 rupees of profit, so that 40,000 rupees for valuation of the goodwill. Getting? So what we have to do in average profit method is simple. In the given question, profits are given to you regarding past years. So all those profits we have to add, divided by number of years, we can get the average profit. So average profit is a base, multiply by number of year of purchase. So number of year of purchase is nothing but number of, what I'm saying here, what I'm talking here is about goodwill formula for average profit method. When we are talking about average profit method for goodwill valuation, so goodwill formula is average profit multiply by number of year of purchase. What is formula? Formula is goodwill is equal to average profit multiplied by number of year of purchase. So what is number of year of purchase here? So number of year of purchase means, so by how multiplication, that is nothing but multiplication. So that average profit can be, so you are saying average profit is 20,000. Okay sir, average profit is 20,000. But what is the maximum capacity of the company, how much maximum amount company can earn, so that is number of years of purchase, right? So by average profit, if I multiply by number of year of purchase, so what I will be getting, I will be getting strength and efficiency of the business, name and reputation of the business, and that is goodwill, right? So for average profit method, first of all I need to calculate average profit. So how to calculate average profit? Yes, how can I calculate average profit? Total profit divided by number of years. Simple. So with the help of this, I can calculate average profit. Once I know average profit, I will put into this formula and I can calculate goodwill. Right? Now, sir, this is a simple thing, but sir, there are some adjustments also. Sir, there are some adjustments also that I need to have. So when you are calculating average profit, you have to understand we have to calculate average adjusted profit. Which profit we have to calculate? Average adjusted profit. So what is the meaning of adjusted profit? For example, Sanjay, you are doing one business from last 50 years. In that business, there are 3 workers previously. In the last 50 years, only 3 workers are working in your business. Now you are thinking of expansion of your business. And for expansion of your business, you required another 3 persons. In the future, you are planning for expansion of your business, right? And for that expansion, you are going to employ another 3 persons. It means you have to incur 3% salary more in the future, right? You have to pay 3 workers salary more in the future. So that is your future expenses, right? So future expenses, wherever there is a future expenses, future loss, so that future expenses, future loss, we have to subtract from the average profit, right? So average profit is nothing but I need to calculate average adjusted profit. So when you are calculating average adjusted profit, what you are supposed to do, sir, if any future expenses are there, those future expenses I need to subtract. Similarly, if there is saving of some expenses in future, if there is a saving of some expenses in a future, so that we have to add. For example, Sanjay, the business that you are running today, you are running from rental premises. The premises place of your business is on a rental basis, right? So you are paying how much? You are paying 50,000 rupees of rent today. You are paying 50,000 rupees of rent today. And you are saying, sir, I am planning of having my own land for the business or own building for the business. It means you are not going to pay rent in future, right? So at present, the land premises from which you are doing a business is on a rental basis. You are paying 50,000 rupees of rent per month. And in future, you are thinking, so I will be having my own land. If you're having your own land, then you are not going to incur expenses of rent. So that is saving for you, yes or no? So that saving we have to add, right? So see here, what I am discussing, it is written over here. So adjusted profit is equal to actual profit. So past, see, additional expenses expected to be paid in future, we have to subtract. I give you example. Salary to employees, right? If I am planning to expansion of my business, so there are 3 workers required to employ, right? And whatever salary I am going to pay to those 3 workers, from my future expenses I need to subtract. Then, so past expenses not required in future, past expenses not required in future, so that is nothing but saving for me. So I give you example of rent. Rent is no longer payable, sir. Sir, last year you were doing your business from rental premises, from rental place, but now you're thinking of having your own land, I can say own building for running a business. So there is no need to pay that rent in a future. So that is nothing but past expenses not required in future, right? So that we have to add. And what we have to subtract? So additional expenses expected to be paid in future, we have to subtract. Example, salary to the employees, right? Then, so past revenues not likely to be earned in future. Sir, in the past, if you were earning some profits, some gains, and those incomes and gains are no longer receivable in future, then it is a loss for you, and that we have to subtract. For example, Sanjay, I was your customer. In last 50 years, I was purchasing goods and services. My company is purchasing goods and services from you. But from future onwards, from next year onwards, I'm buying goods and services from you, right? So that is loss against you, and that loss we have to subtract, right? So loss we have to subtract. That is nothing but past revenues not likely to be earned in future. Sir, in the past, I was buying goods and services from you, but from today onwards, from next year onwards, I'm not going to purchase any goods and services from you. So that is loss of revenue for you. So that loss of revenue you have to subtract, right? Then, so there is an additional income expected in future, right? For example, Sanjay, you are planning to purchase one imported machine. You are running a factory and you are planning to purchase some imported machine. If you purchase that imported machine, you are expecting to increase your revenue, right? If you purchase some imported machine, that is a machine from USA, then after this machine now, I will be having more revenue generation possibility, right? So that is nothing but additional income expected in future. So this is nothing but income in future, and that income in future we have to add, right? So simple. Whenever you are calculating average profit, right, we have to calculate average adjusted profit. So what is meaning of adjusted? Adjusted means we have to do some adjustments. So which kind of adjustment? So income which is receivable in future, so that we have to add. Income which is receivable in future, that we have to add. I give you example of you purchase machinery, and because of which you are thinking your revenue will increase, right? So that is nothing but expectation of earning income in future, that we have to add. Similarly, if income that you are earning in the past you are not going to get in future, so that is loss for you, that we have to subtract. I give you example, you are losing what? You are losing your old client, right Sanjay? I was your old client, I was purchasing goods and services from you, but from future, from today onwards, I'm not going to purchase. It is loss for you, you have to subtract that. Similarly, sir, we have to think about expenses. So expenses likely to be incurred in future, right? So that we have to add. Which kind of expenses we have to add? We have to subtract. Which kind of expenses we have to subtract? So salary to employees. You are planning to expansion of your business. You require 3 more workers, right? So that is expenses in future, that we have to subtract. And so expenses get saved, that we have to add. For example, sir, last year, up to last year, the premises from where you are working, where you are doing your business was on a rental basis, right? And you are now going to conduct your business from your own building. So that is nothing but the rent amount gets saved, and that is your profit, that is your gain, that is your saving, that you have to add, right? So if I summarize this now, I will summarize like this. See, sir, expenses, and there are some incomes. Sir, if you are thinking of, there will be possibility of future expenses, right? In future, you are thinking that there is possibility of having future expenses, like example, salary. So those expenses we have to subtract. If you are thinking past expenses are no longer payable, past expenses no longer payable, right? Past expenses no longer payable. For example, rent, so that we have to add. Sir, expenses no longer payable is my saving, na? So saving we have to add. Then what about income? Sir, if you are thinking of income likely to get in future, so that we have to add. Example, your revenue will increase. Na? After purchasing machinery, your revenue will get increased. Right? That you have to add. So income of past no longer receivable. So that we have to subtract. For example, you lose customer, right? So that customer is not going to continue buying and selling of goods and services from you in future, right? Getting this? So this is nothing but adjustment of profit, right? And based on that, we can move further for valuation of goodwill. Now, so when we are thinking about doing average, or when we are thinking about average, so there are two types. We studied in maths. There is simple average and weighted average, right? Simple average is there and weighted average is there. So here also for valuation of goodwill, when we are talking about average profit method, so there are two profits, simple average and weighted average, right? We'll discuss that with the help of example. See, and what is goodwill formula? We already discussed. So goodwill formula is average profit multiplied by number of years of purchase. So number of years of purchase already given to you, right? That we have to multiply. Then how to calculate average profit? So total profit divided by number of years. We already studied this, right? Okay. Now we have to see one question. With the help of this question, you can get clarity. See, following are the profits of the firm in last 5 years. So 5 years profit is given to me. 5,000, 2,000, 5,000, 4,500 and 3,500. Calculate value of goodwill at 3 years purchase of average profit of 5 years. So number of years of purchase is given to me is how much? 3 years purchase now?
3 years.
Yes. 3 years purchase is given, right? And I need to do average profit of last 5 years.
5.
So what I need to do, first of all, I need to calculate average profit. So how to calculate average profit?
Total profit.
Yes, we have to add this total profit now. 5,000, 2,000 plus 5,000 plus 4,500 plus 3,500. So what is total? 20,000 divided by 5, 4,000, right? So we get to know average profit 4,000. Then we have to put into the formula. So goodwill is equal to average profit multiplied by number of years of purchase. So 4,000 multiplied by 3 years of purchase. Answer is
12,000.
12,000. 12,000 is goodwill answer, right? Any doubt in this? Yes, Gokul? Yes, Sanjay, any doubt, any question?
No, sir.
Okay, good. Now, see the next question. See, a partnership firm has decided to value goodwill for the purpose of settling a retiring partner. So there is a one retiring partner who is going to leave from partnership firm business, right? So at the time of retirement now, we have to pay him back his goodwill amount, right? And that for that purpose, we have to value the goodwill of the firm. As I said you, valuation of goodwill is there in every chapter, in admission of partner, retirement of a partner, death of the partner, right? Valuation will remain same, but adjustment will differ, right? Adjustment of goodwill will differ in admission, retirement and death, but valuation part will remain same, right? Okay, the profits of that firm for last 4 years were as follows. The last 4 years profit is given to us: 50,000, 25,000, 65,000 and 30,000. The business was looked after by partner. No remuneration was paid to him. The fair remuneration of a partner valued at comes to rupees 6,000 per annum. Sir, there is one active partner in a business, that is Gokul. Gokul was looking after this business from last several years, or from, I can say, from last year onwards, and he is expecting a remuneration. So what is remuneration? So remuneration is nothing but commission, salary, right? He is expecting salary. We have not yet paid the salary, but because he is looking after to the business operations. So we have to pay him 6,000 rupees of remuneration in future, right? So what we have to do about this adjustment? What do you think, Sanjay, Gokul? 6,000 per annum of 6,000 per annum of salary we supposed to pay to Gokul in a future.
to be
We have to subtract. So we have to subtract 6,000 rupees in each and every year profit, or after averaging that profit we can subtract only once.
for each and
Okay. See, 6,000 is common amount now.
for a year.
6,000 is a per year, and every year we have to pay 6,000 now, right?
Yes.
Whether we paid in future, no sir, we haven't paid so far, right? We have to pay, right? So it is nothing but future expenses. So what I need to do, so 6,000 is permanent amount that I supposed to pay in future. So what I need to do, so 50, 25, 65, 30, I can average it. First of all, I can average it, right? 50,000 plus 25,000 plus 65,000 plus 30,000 divided by 5. Can you give me answer? 50 plus 25 plus 65 plus 30. What is total?
1,80,000.
50,000 plus 25,000 plus 65,000 plus 30,000 divided by number of years are 5.
4.
5 now? Okay, 4.
So 4.
Yes. Divided by 4. So total is 1,80,000 divided by 4. Gokul is saying 1,47,500. What is this? This answer is about.
Sir, it's 1,70,000.
Total is
1,70,000.
50, 60, 70, 80, 85, 90, 90 plus 30, 120, 120 plus 50, 170 I guess. Please check once.
Yes,
1,70,000 no?
Yes, sir.
$65 plus 25, it comes to 90.
Yes, sir. 90
plus 30.
120 plus
120 plus
50,
50, 170. 170 divided by 4. Okay, it's 147 or 47. Just check once, Gokul. No, it will not, I guess. 1,70,000 divided
170,000 divided by 4 is 147.
No.
Sir, 42,500.
See,
Oh,
4,
sorry. Okay, so 42.
yes. 4 4s are 16,
Yes,
right? 1 carries.
42.
4 2s are 8.
500.
Yes, 42,500. Right? So 42,500 is your average profit, I can say. But sir, we have to subtract what? We have to subtract 6,000 rupees, which is likely to be incurred in future, right? We have to pay 6,000 rupees to Gokul as his remuneration. So minus 6,000. So what will be the adjusted profit?
Sir, only 6,000. sir.
Only 6,000 we have to pay. 6,000 per
Yes.
annum, no?
36,500.
Yes.
6,000
So,
per annum, and I have calculated average 42,500 for 1 year only, no? Right?
yes, sir.
Okay. So what is the answer?
36,500.
36,500. So average adjusted past profit. Average adjusted profit 30,500. Multiply by sir number of year of purchase. Number of year of purchase is given in the question or not?
3.
Just check. 3 years
years.
purchase. Yes, absolutely correct. So 36,500 multiplied by 3. So what will be the answer? 300, 300, 5 3s are 15.
1,09,500.
1,08,000.
1,09,500. Is it correct?
Yes, sir.
Right? 1,09,500 is my answer. And that is Goodwill answer. See? Check your answer. Right? Getting this, Sanjay?
Yes, sir.
Yes, Gokul?
Okay.
Understood?
Yes, sir.
Okay, good. We have to move further now. See, can you read this question? I'm giving you 2 minutes. Just read this question. Let me know afterwards what you understood. Right? After reading the question, what you understand, please let me know. I will discuss with you. I'm giving you 2 minutes. Read this question and each and every adjustment, which effect we have to provide. Right? Right, Sanjay? Gokul?
Yes, sir.
Okay, just read this question. Adjustments are slightly different, but I need to check your understanding. Okay, I'm discussing now. See, from the following information relating to Arul Enterprises, calculate the value of goodwill on the basis of 2 years purchase of average profit of 3 years. So what is line here? Calculate value of goodwill on the basis of 2 years purchase of average profit of 3 years. Right? So we have to do average profit of 3 years and then we have to multiply by for calculation of goodwill. So first adjustment. A profit for 3 years ending on 31st of December 16, 17 and 18, 46,000, 45,000 and 50,000. So last 3 years profit is given to me. Okay. A non-recurring income of 6,000 is included in profit of 2016. So what they are saying, so in profit of 2016, so 2016 profit is 46. Sir, in this 46,000 rupees of profit, one non-recurring income is included. So my question is, what is recurring income? What is non-recurring income? Yes, Sanjay, Gokul. What is recurring income? What is non-recurring income? Any
Which
idea?
has not occurred.
Yes, please, Sanjay.
Sir, which has not occurred.
Non-recurring means which is not occurred. Okay. Gokul, what is meaning of recurring, non-recurring income?
Sir,
Do you know such expenses are divided into recurring expenses, non-recurring expenses, as well as income is divided into two, recurring income and non-recurring income? Okay. See, recurring and non-recurring meaning is simple. So whenever you are talking about income, or you can say a profit, so that profit has to be a business profit or operating profit. Operating profit. Sir, if I'm calculating goodwill, sir, for calculation of goodwill, always I need to consider operating profit. So what is the meaning of operating profit? Right? So operating profit means, suppose if I'm running a business of manufacturing and selling of this pen. If I'm running a business of manufacturing and selling of this pen, sir, any expenses incurred by me for manufacturing of this business, this pen, is my operating expenses, and any income derived by me after selling this pen is my operating income. Right? What I'm saying, so operating profit, when I talk about operating profit, so operating profit you can calculate by considering operating income minus operating expenses. So what is meaning of operating income and operating expenses? Sir, operating means your main business activity. So my main business activity is of manufacturing and selling of this pen. So any income derived by me after selling this pen is my operating income. And any expenses incurred by me for mine is my operating expenses. Yes or no? So that can be a rent paid by me, that can be a electricity paid by me, electricity bill paid by me, that can be a raw material purchased by me, right? But sir, we know when we are running a business now, sir, apart from operating expenses, there are some non-operating expenses as well, right? Or non-operating loss as well. So non-operating means which are not connected to my day-to-day business. For example, sir, so for example, if someday there is a short circuit in my godown, and because of that I lost some damage of some goods happened. So that loss is my day-to-day loss. Is it my recurring loss? No, sir, it's a non-recurring loss, right? Similarly, sir, there are some incomes which are non-operating also, non-recurring also, right? Which is not related to my day-to-day business, sir. For example, for example, if I received interest on my FD, fixed deposit, if I received dividend from investment, right? So those kind of incomes are not my day-to-day business incomes. Those are non-recurring income. Those are non-operating income. Getting? So operating means recurring, that you are deriving on a regular basis from your operation, right? Operating expenses are recurring in nature. Recurring means so you are incurring these expenses on a regular basis for running your business. But sir, non-operating is nothing but non-recurring. So those expenses, those incomes are not regular in nature, are not connected to your day-to-day business activity. I gave you example, loss by fire, right? I gave you example, income received as a interest on FD, dividend from shares. So those are not your day-to-day
Yeah.
business income and day-to-day business expenses,
Expenses.
right? So those are known as
Not
non-recurring.
recurring.
Now tell me, if I'm saying my business is having name, fame, reputation in the market, if I'm saying my business is having name, fame and reputation in the market, so that name, fame and reputation is based on my operating profit or my non-operating profit? But obviously, sir, that should be based on my operating
Big
profit. That should
profit.
be based on my recurring
Big
income and
profit.
recurring expenses, right? Right? That's why whenever we are calculating goodwill, sir, non-recurring incomes and non-recurring expenses, we are not supposed to consider. Once again, I'm repeating. So whenever you are calculating goodwill, sir, the profit that you are calculating now, so that profit, average profit that you are calculating, so that profit, recurring profit, operating profit. So another name for recurring profit is operating profit,
Profit.
right? That's why I'm saying, sir, non-recurring income, non-recurring expenses, we are not supposed to consider. Non-recurring income and non-recurring expenses, we are not supposed to consider while calculating average profit for goodwill valuation. Are you getting this
Okay.
concept? Right? So what we have to do here now, tell me. Sir, in 2016, we earn a profit of rupees 46,000. While calculating that 46,000 rupees of profit, so we have considered 6,000 rupees of non-recurring income. So non-recurring income means that income is not related to my day-to-day business activity, right? So what should I do now? How can I adjust this?
Should not consider it.
Should not consider means what? I need to subtract now, because in that 46,000, 6,000 is included now.
Yes.
See it, sir.
So subtract.
Yes, when you calculated 2016's profit, your profit is 46,000, right? So this 46,000 profit you get, how you get this? By adding income and by subtracting expenses, no?
Yes.
So previously you added 6,000 rupees of income, but that income was incorrect, sir. Why? That was non-recurring in nature, right? So what we have to do? So from 46,000, we have to subtract 6,000 rupees. So we can get business profit as 40,000 rupees. Getting, and this is my correct profit. Getting, yes or no?
Yes.
Yes, Gokul? Getting this?
Yes, sir.
Okay, good. Now, so next adjustment is closing stock for the year 2017 was overvalued by 10,000. So what is meaning of overvalued? Can you tell me, Gokul? Can you tell me, Sanjay?
Sir, excess.
You have recorded closing stock more by 10,000, right?
This is surplus.
Surplus. So because of that, what will happen?
Capital increased.
Capital will increase. What about profit?
It's a closing.
What about profit? Profit
Increased.
will also get increased, now.
Yes, sir.
Sir, if I prepare here normal trading and profit and loss account, combine of trading and profit and loss account, I'm preparing here. Tell me, where we have to record closing stock, on the debit side or on the credit side?
Credit side.
Where we record? Yes, absolutely right. We record closing stock on the credit side. And suppose closing stock I have recorded here. So we know income we record where? So income always we have to record on the credit side and expenses on the debit side. So I am preparing this trading and profit and loss account roughly. Now tell me, if you get balance here, after closing this account, if you get balance here, so that we term as profit, no?
Yes.
Sir, after closing this account, trading and profit and loss account, if I get balance on the debit side, it is known as profit. And if I get balance here, then
Loss.
so it is a loss. Now tell me, sir, while calculating closing stock of 2017, you have recorded 10,000 rupees more. You have overvalued your closing stock. You have recorded closing stock more by 10,000 rupees, right? So because of this, so your profit is also getting increased by 10,000, na? Yes or no?
Yes, sir.
Yes or no? Gokul, getting this?
Yeah.
Sir, if you recorded your income more by 10,000, but obviously, sir, your profit is also get increased by 10,000, right? And is that correct, sir? No, sir, that was not correct. Actually, your closing stock was not more by 10,000, right? So what I'm going to do, sir, in the 2017's profit, so what is profit of 2017? 45,000, right? So in 45,000, what I will be going to do in 2017, so profit is 45,000 rupees. In that profit of 45,000, I will be subtracting 10,000 rupees, right?
Yes.
Right? Now my second question to you. Sir, 2017's closing stock is 2016 opening stock, yes or no?
Yes, sir.
Right? Sir, 2017's closing stock is nothing but 2016's opening stock. So it means opening stock of 2016 is also more by 10,000, yes or no?
Yes.
So what I need to do now for 2016's profit? So 2016's profit is also not correct then.
2018, sir. 2016.
Sorry, 2017's closing becomes 2018's opening. Yes, correct. Yes, correct. So 2017's closing is nothing but opening of 2018, right? So opening stock of 2018 is also more by 10,000. So what I need to do? What I need to do then? I need to subtract or I need to add?
Add.
Why I need to add?
Sir? Because
Why?
this
Over.
See, yes, absolutely correct. Sir, I am preparing once again trading and profit and loss account for 2018 now. Right? If I prepare 2018 trading and profit and loss clip together, so I will be recording opening stock here now on the debit side now.
Yes.
Sir, on the debit side we used to record what? Expenses.
Expenses.
And on the credit side we used to record income now.
Incomes.
Right? And if you close down this account, if you get balance here, it's a profit.
Profit.
And if you get balance here, it's a loss.
Loss.
So it means you have recorded your expenses more by 10,000, sir. Right? You recorded your expenses more by 10,000. It means that will be having impact on your profit. Your profit is less by 10,000 now. Right now? See, you have recorded your opening stock more by rupees 10,000. It means your profit is your profit is incorrect, sir. Right? So what I need to do to correct my profit of 2018?
I have to add something.
Yes, absolutely right. I need to add that. See, it is simple. You have recorded on the debit side one expenses. Forget about that opening, forget about that overvaluation and everything. Suppose Sanjay, you recorded on the debit side 10,000 as a salary to your worker, right? And it is wrongly written. Actually, this expenses you have never incurred. These expenses you never incurred, but you recorded on the debit side. Now tell me, if you recorded one expenses on the debit side which is wrong, so it means your profit is under by, or your profit is not correct. It is less than 10,000.
Yes.
Right? Now if you are removing that expenses, so your profit will get increased by 10,000. Now getting, so any expenses which is wrongly recorded by you on the debit side, if you're removing that, so your profit will get increased. And any income which is not actual income, you have recorded on the credit side, it means your profit is more by that much of amount. That is for 2017, right? So if you're not getting concept, then it's simple. So over valuation of closing stock of 2017, I will be going to subtract, and so that opening closing stock becomes opening stock of 2018. So in the year 2018, sir, what I need to do, I need to simply add that 10,000 rupees into the profit, right? So 2018's profit is how much?
50,000.
2018's profit is 50,000. In 50,000 rupees, what I need to do? Sir, I need to add 10,000 rupees. I need to add. So I will be getting 60,000 as a final answer. This is 60,000. 2017 is 35,000, and 2016 it is 40,000. Right? So this is my correct profits now. Getting? And this correct profit I can add now, right? So add this profits. 40 plus 35 plus 60. 1,35,000 divided by 3.
45.
45,000. So 45,000 is my average profit, average adjusted profit. Multiply by number of year of purchase.
90,000.
45,000 multiply by
Into
number of year of purchase is 2, no?
2.
Multiply by 2. So my goodwill answer is
90,000.
90,000. Getting these. Understood concept? Okay, good. So 90,000 is my answer. And answer is correct. Absolutely correct. Right? Okay. So this is nothing but simple average. So what about weighted average then? See what I'm saying. Listen it carefully. Sir, even if we are doing question by weighted average, sir, all other things will remain same. Whatever past adjustment that we studied now, sir, if there is expense in the future, that we have to subtract. If there is a saving in the future, that we have to add. If there is a expenses no longer payable, so that we have to add. So that those adjustments will remain same. Only methodology will change. So weighted average profit. So profit we have to calculate by weighted average here. That's it. All other things, all other adjustments will remain same. Right? See here one question, then you can understand. See these. So for the purpose of admitting a new partner, firm has decided to value goodwill at 3 years purchase of average profit of last 4 years using weighted average method. So we have to calculate weighted average profit. We have to calculate weighted average profit, right? For profit of past 4 years, and respective weights are as follows. So 2015, 2016, 2017 and 2018. So 4 years profit is given to me. 30,000, 25,000, 35,000 and 20,000. So weights are also assigned to me. 1,000, 1, 2, 3 and 4. These are weights given to me. So what I need to do, how to calculate weighted average profit? So when you are calculating weighted average profit, simple we know, sir. We studied this in maths as well. So these profits, we have to write down like this, right? And we have to apply weights. We have to multiply by weights, right? So we can get weighted profit. So weights are already given 1, 2, 3, 4, right? So if weights are not given, then I need to assign weights, right? For 15, 1, 2, it's an purely assumption. As per your understanding, you have to assign a weight 1, 2, 3, 4, 5, right? So you have to multiply now. So you will be getting weighted average profit. Weighted profit A multiplied by B. 30,000 multiplied by 1, 30,000. 25,000 multiplied by 2, 50,000. 35,000 multiplied by 3, 1,05,000. 20,000 multiplied by 4, 80,000. Right? Now what I need to do? I need to do total of weights as well as total of weighted profit. So total of weighted profit is 2,65,000 rupees, right? Divided by weight. So weight is how much? 10.
10.
So if I do this, I will be getting weighted average profit. That is 26,500,
6,500.
right? Simple. So weights are given, profits are given, multiply it, you will be getting weighted profits. Now we have to do total of weighted profit as well as total of weight, right? So formula for weighted average profit is total of weighted profit divided by total of weight. Simple. So I get to know 26,500 rupees as weighted average profit. Multiply by, so multiply by number of years of purchase, which is given in the question. So number of years of purchase are 3 years purchase now, right?
3 years. Yes.
3 years. So we have to multiply by 3. 26,500 multiplied by 3. So we can get the answer.
99,500.
99,500 is my goodwill amount. Right? Simple. There were no adjustment. Just we have to put it into this and we can get the answer. 79,500 or 99,500, just check.
99,500.
79,500. Okay. 79,500 rupees is my answer for goodwill, right? Getting Sanjay Gokul?
Yes, sir.
Okay. Next. See this. For the purpose of admitting a new partner, a firm has decided to value goodwill at 3 years purchase of an average profit of the last 4 years. Using weighted average method, profit of last 4 years, respectively weights are as given. So nothing different difference here. The question that we did, this question is same, right? What we have to do, sir, simply we have to multiply with this. We can get weighted profit, right? So we have to add weighted profit divided by number of weights, so we can get weighted average profit. Multiply by, so multiply by number of year of purchase, we can get goodwill amount, right?
Yes.
Getting nothing difference. So what I am expecting, you have to solve this question afterwards your own as a homework, right? Getting, I'm not going to solve this at present. The question is same. You have to solve your own afterwards, right? Getting Sanjay?
Completed.
Completed? Okay,
Yes.
good. Okay. So next is your super profit method. So what is super profit method? And how to calculate goodwill by super profit, that we will discuss here. See, if you want to solve this, you can solve at present also. No issues. Gokul, Sanjay, solve this at present, no issues.
I took screenshot of the.
You can solve at present, no issues. I'm giving you 5 minutes. Solve it.
Okay.
Neatly solve, then we'll discuss.
So Okay.
So completed.
Sorry.
Final answer of goodwill is 75,000.
25,000.
Yes, sir. Yes, sir. Okay.
Yes, answer is correct. 75,000 is correct. Okay.
Yes, sir.
Okay. Just give it 2 minutes. I'm putting here some question from your past year papers based on your average profit, right? Just give it 2 minutes. No issues, Sanjay. See, check this question. Read this question and try to solve. Let me know answer. Then Sanjay? Okay, so what is your answer?
Sir, 30,000.
Just a minute now.
Sir,
Yes. Both of you getting same answer?
what's the answer?
What is your answer, Sanjay?
Sir, 30,000.
30. He's saying 30,000. 30.
I got 65.
Okay, we'll check. We'll calculate. We'll discuss. Uh,
Sorry, 32,500.
you are getting 30 to 500. Okay, no issues. We'll discuss. A, B are partners in a firm. They admitted C into the firm. The goodwill for the purpose of is to be calculated at 2 years purchase of average normal profit of the last 3 years, which were as 10,000, 15,000, 30,000 respectively. Second year profit included profit on sale of machinery 10,000. Sir, profit on sale of machinery is recurring income or non-recurring income?
Non-recurring.
Non-recurring income. So non-recurring income we have to subtract now? Yes or no?
Yes, sir.
Okay, sir.
Getting now? Sir, as I said you, which income I need to consider? I need to consider recurring income. Which expenses I need to consider? Recurring expenses. So non-recurring we are not supposed to consider. Sir, you derived a profit of rupees 10,000 after selling a machinery. So sale of machine is not my business now. So my business of manufacturing and selling of this pen, right?
Yes, sir.
After selling this pen, whatever income I am getting, that is my recurring income. That is my recurring profit. The selling of machine is not my business. Even if I earn the profit, it's my profit, sir. It's my income, sir. But that is not required for valuation of goodwill. So what I need to do, sir, so it is related to which year? Second year, no? So second year profit given to be 15,000. From that 15,000, I need to subtract 10,000 rupees, right? So my correct profit of second year is
5,000.
5,000. So this is second year. So first year profit I need to consider as it is 10,000,
10,000.
and
30,000.
third year 30,000. So I need to add this now,
45,000.
45,000 divided by number of years 3,
3. 15,000.
15,000 multiply by
2.
2. So correct answer is
30,000.
30,000. Yes, absolutely correct. Gokul getting Sanjay?
No,
Yes,
sir.
sir.
I added 10,000 times.
You added 10,000. Okay. The sale of machinery is not your business now. Your business is something different. Buying and selling of this machinery and earning profit is not your recurring income. It's a non-recurring income always, right?
Okay.
Okay. See this question now. I can give you a hint. So hint is clear. We have to consider when you are calculating profit, you have to consider only recurring income and recurring expenses. So non-recurring income, non-recurring expenses, you have to adjust, right?
Sir, sir,
Yes, please.
can you please zoom in?
Shall I zoom in or zoom out?
Zoom in.
Is it okay now?
Yeah, yes, sir.
Okay.
Sir,
Done? Yes, Sanjay, Gokul.
Yes, sir.
Shall I discuss, Gokul?
Sir, non-trade investments should be subtracted, yes, sir.
Including interest on non-trade investment. Yes, yes. So I'm preparing a solution here. Just check whether your answer is correct or not.
Yes.
The profit of last 5 years of the firm were as follows. 1314 profit is 1,92,000, including abnormal gain 15,000 on profit on sale of fixed assets. Sir, you sold out one your fixed asset, that can be a machinery, and you earn a profit of rupees 15,000. So I know this 15,000 is non-recurring income, right?
Yes, sir.
So non-recurring things we have to subtract.
Subtract.
So 1,92,000 minus 15,000. What is correct profit now?
1,77,000.
1,77,000 is the correct profit, right?
Yes.
So in the year 1415, 95,000 is the profit after debiting loss of stock by fire. So loss of stock by fire, is it my recurring expenses?
No, sir.
No. Sir, you have considered 75,000 rupees of expenses, and that 75,000 rupees of expenses that you consider while arriving at 95,000 rupees of profit. Sir, that was not correct. You subtracted 75,000, yes or no? So when you prepare trading and profit and loss account, you recorded 75,000 on the debit side.
Yes, sir.
It means you subtracted 75,000 rupees of expenses.
Yes.
You recorded 75,000 rupees more expenses. Actually, that 75,000 rupees of expenses is not correct for valuation of goodwill, right? So what I need to do?
Add it.
Yes, 75,000 rupees we have to add. So after adding that, what will be the profit? Getting in a Gokul?
Yes, sir.
1,70,000.
95,000 plus 75,000. Yes?
I have a doubt.
Yes, please.
They gave year 2014 to 15 rupees 95,000 after debiting loss of stock by the way.
Yes.
So they gave after debiting loss of
After
stock.
debiting means after subtracting 75,000, the profit is 95,000, right?
So why? Oh,
See, what is the thing here? When you prepare trading and profit and loss account, I will explain you concept, then you will understand. So whenever you prepare trading and profit and loss account for any business, you record expenses on the debit side and income on the credit side. So when you record expenses, so you record both the expenses. You record recurring expenses as well as non-recurring expenses. So recurring expenses means salary paid by you, right? Then electricity payment paid by you, right? Rent paid by you, all are nothing but your day-to-day business expenses. That is recurring. Apart from that, non-recurring expenses are also there. So non-recurring expenses like loss by fire, like loss on sale of asset, right? You have recorded both. Similarly, on the credit side, you have recorded both the income, recurring as well as non-recurring. So for example, so what is recurring? So always sale is recurring, no? Sale is always recurring. So what is non-recurring? You received interest received, commission received, right? That you used to record on the credit side, no? Then profit on sale of asset, profit on sale of asset. All these incomes you recorded on the credit side, right? After considering this, you find profit, right? After considering all these income and expenses, you close down this trading account, profit and loss account, and you get, if balance you get here, it's a profit. And if you get balance here, it's a loss. Now, is it correct, sir? Yes, we follow this. In 11th standard, you also studied this, no? So we have to consider this much of expense on the debit side, this much of income on the credit side. There's nothing wrong in this. But for valuation of goodwill purpose, we have to consider only this part and this part, right? So what I need to do? So whatever profit given to me now, so for example, profit arrived by me is 50,000. So this 50,000 rupees of profit is after considering this and this. this non-recurring expenses and non-recurring income, right? So what I need to do, sir, the non-recurring income that you considered na, that you added na, so that I'm going to subtract, simple. And non-recurring expenses that you subtracted na, that I'm going to add, simple. Getting? Sir,
Okay.
expenses that you subtracted, that I'm going to add back, and income that you added on the credit side, that I'm going to subtract, simple concept. Getting?
Yes, sir.
Getting now?
Yes, sir. Thank you.
Still, if you have doubt, I can explain,
Okay.
right?
Okay.
I think you get this, right? Get this concept. Gokul?
Yes, sir. I got it.
Okay, okay, good. So that's why the expenses, non-recurring expenses, always we have to add back, right? And non-recurring income we have to subtract. That's it, right? So come here now. See, once again, in the year 13-14, in the year 13-14, what happened? 1,92,000 is profit given to me, but it is, while arriving at that profit, you consider 15,000 rupees of profit on a sale of asset. Now tell me, sale of asset is it my recurring profit? No, sir, it is non-recurring profit. Na? And I said, I explain here to you. So non-recurring, what I need to do non-recurring? So non-recurring, I need to less.
Subtract.
Yes. So that's why I have subtracted from 1,92,000 rupees. I have subtracted 15,000, and then I get 1,77,000 as answer. Right now. So in the year 14-15, 95,000 is profit given to me. Right, sir, and they are saying in bracket, they are saying after debiting, so it means they have recorded on the debit side loss of stock by fire 75,000. First of all, I need to take it. I need to understand, is it expenses related to recurring or non-recurring? So particular, right, non-recurring expenses. Sir, non-recurring expenses will be subtracted previously. Now what we have to do? We have to add them. See here, non-recurring expenses and losses we have to add. Getting? So that's why in 95,000 I need to add back 75,000 rupees, right? So 95 plus 75,000, what will be the answer? Yes, 1,60,000. Am I correct? Or 1,70,000?
1 lakh 70.
1,70,000.
1,70,000. So 1,70,000 is the correct profit. Okay. Now we have to move further. See, in the year 15-16, what happened? So in the year 15-16, 1,23,000 is the profit, right? Even non-trade investment. Sir, you invested somewhere, right? You invested somewhere. For example, you invested in FD, fixed deposit. Sir, investing in fixed deposit, it is not my business, no, sir. I am having extra money and I deposit it into bank and I am getting interest. Sir, the interest that you are getting, and they clearly mention non-trading. Non-trading means non-recurring. Simple. They have mentioned, sir, in this 1,23,000 rupees of profit, 10,000 rupees of income included, which is non-recurring. So what I need to add this 10,000 or I need to subtract this 10,000?
Subtract.
Yes, simple. From 123, I need to subtract 10,000. You will be getting answer 1,13,000. Yes, absolutely correct. Then, sir, now 16-17, they are talking about 16-17. So 1,30,000 is the profit given. The closing stock overvalued by 10,000 at the end of the financial year 2017. Sir, when you recorded closing stock of 2017 now, so closing stock is more by 10,000, right? So it is wrong, sir. Na? It means your profit is more by 10,000 now.
Yes, sir.
So what I need to do? I need to subtract, simple. 130 minus 10, 1,20,000. Absolutely correct, right, Sanjay? Yes. So I'm getting correct profits now. So all this correct profit I need to add. Add this. Let me know the total. 1, 2, 3, 4. 4 years correct profit. What is correct adjusted profit? Do the calculation.
So 5,80,000.
Can you repeat once?
5,80,000.
80,000.
5,80,000. Okay, so 5,80,000 divided by
Divided by 4.
4. Answer.
1,45,000.
Okay.
1 lakh 40.
Average profit is equal to 5,80,000 divided by 4. So answer is 1,45,000, right? Multiply by number of year of purchase. So number of year of purchase is 2, na? Multiply goodwill answer.
2,90,000.
2 lakh.
90.
And that is correct answer. 2,90,000 is the correct answer. Getting
Yes, sir.
understood?
Yes, sir.
Simple.
Yes, sir.
Okay, good. See another question. See, it's now weighted average profit, but sir, things will remain same, right? First of all, you have to calculate correct profit, correct adjusted profit. Then you can assign weights. See, I'm preparing here way of answer. So first of all, you have to calculate adjusted profit. Then you can write down weights. Then you can calculate weighted profit. Right? So weights are mentioned here. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. But adjusted profit you have to calculate. See, in the year 12-13 there is no adjustment. In the year 13-14 there is an adjustment, sir. Abnormal gain is included in this 1,85,000. Then in the year 14-15, sir, after debiting loss of stock of rupees 55,000. 15-16, so there is no any adjustment. 16-17 there is no any adjustment, right? So first of all, calculate adjusted profit, right? Then weight you have to multiply by weight. Then you can get weighted average profit, and then we can do the total of this. Start solving. If you need any help, I can do that. Yes. Yes, Gokul.
Abnormal gain you have to subtract add.
It is abnormal gain means non-recurring income, no?
Yeah,
So non-recurring income is included, so we have to subtract. Absolutely correct.
Yeah.
35,000 you have to subtract. Correct. Then Gokul, Sanjay. Then with adjusted profit.
Yes, sir.
So first year adjusted profit, sir, 2,20,000 only, right? There is no any
2,20,000.
adjustment. Yes. 2,20,000. The second year 185 minus 35.
1,50,000.
So we have to subtract this 1,50,000.
1 lakh.
Yes. 95. So
1 lakh 50.
after debiting loss of fire means that 55,000 we have to add now.
Yes, sir.
So what will be the answer?
1 lakh 50,000.
1,50,000 only. Okay.
Yes, sir.
Then fourth year 1,20,000 and fifth year 1,30,000. Then we have to calculate weighted profit. 2,20,000 multiplied by 1, answer is 2,20,000. 1,50,000 multiplied by 2, answer is 3 lakh.
3 lakh.
150 multiplied by 3, 4,50,000. 120 multiplied by 4, 4,80,000.
4,80,000.
Yes. 1,30,000 multiplied by 5,
6 lakh 50,000.
6,50,000. So total
21 lakhs.
21
21
lakhs.
lakhs.
Okay.
By 50.
Divided by 15, you can get weighted average profit.
Wait.
Yes. Therefore, weighted average profit is equal to 21 lakhs divided by 15. So answer is
7 lakh.
7 lakhs.
7
Is it correct? 7 lakh?
Sir, 1,40,000.
So 1 lakh.
Yes. 1,40,000 is the correct answer. No issues. Therefore, goodwill is equal to weighted average profit multiplied by number of years of purchase. The number of years of purchase given in the question is 3 now.
3.
Yes. So therefore, goodwill is equal to 1,40,000 multiplied by
3.
the answer is
4 lakh 20,000.
4,20,000.
4,20,000, and this is my answer for goodwill. Getting
Yes, sir.
Yes, sir.
understood these? So such a kind of adjustments we have to do when there is a valuation of goodwill under average profit method or weighted average profit method. Getting?
Yes, sir. Okay.
Okay. So now, so apart from this, there are also methods, that is super profit method, right? See, I'm just discussing a method here. The question based on this will be going to do in next session, right?
Okay.
Okay. So super profit method. What is super profit? What do you understand by super profit? Sir, if you are earning a profit more than your capacity, that is your super profit. Super profit. What is super profit? If I say I'm having a superpowers, it means I'm not a normal person, no? Right? So what is super profit? Sir, if you are earning a profit more than your average profit, normal profit, right? So that is more than average profit. See, if I'm earning if I'm earning profit more than my average profit, it is known as super profit, right? So see the formula. So formula for calculation of super profit is average profit minus normal profit. Simple. So on an average, my capacity, see, as I said earlier, Sir Sanjay is 75% mark student, right? That is his average. But suppose in 12th standard he scored 90%, right? So it is extraordinary performance from him, right? So average, on an average, he was a 75% student, but now he's having a percentage of 90. So whatever percentage he is earning more, that is nothing but his super profit, right? Now, so here, what is normal profit? How to calculate normal profit? See, average profit, we know how to calculate average profit, but how to calculate normal profit? So normal profit formula is capital employed multiplied by normal rate of return. So what is capital employed and what is normal rate of return? Sir, capital employed in simple terms, capital employed is nothing but amount of capital invested by you in your business. That is your capital employed. Employed means invested, right? So when I started a business, I start business by putting 10 lakh rupees into the business, right? So that is my capital employed. But sir, in accounts, how to calculate capital employed of existing business? So business which is running by year. Now the Sanjay who is running this business, so it is 50th year, I can say, right? 50 years are happened to this business. So for such a business, how can I calculate capital employed? So capital, there is a formula for that. So fixed assets plus current assets minus current liabilities. I can get capital employed, right? For calculation of capital employed, what I need to do? I need to consider fixed assets. I need to add current assets. I need to subtract current liabilities, right? So what is current liability? So bank overdraft is there that I need to repay, right? So there are creditors that I need to repay, bills payable I need to repay, right? So those are nothing but amount payable. So that current liability I need to subtract, that is known as current liability. So what is current asset? So debtors, bill receivable are current assets, right? So I am having cash in hand, I am having cash at bank, that is my current asset, right? So what is current assets? The current asset which are there in my business for 12 months is known as current asset, right? So for example, debtors. So debtor means, sir, suppose I sold out goods to Sanjay today on a credit basis, right? 50,000 rupees of goods I have sold to Sanjay on a credit basis. So Sanjay, you supposed to pay me 50,000 or not? I will be giving you credit of 2 months, for example. Max to max, I am allowing you credit of 2 months. It means you can pay me 50,000 rupees after 2 months. So it means the asset that I can realize into cash within a period of 12 months is known as current asset. Example, sir. Example of current assets are debtors, bill receivable, cash in hand, cash at bank, stock, closing stock, right? All are nothing but your current assets, right? What is fixed assets, sir? So assets which are there in your business for more than 12 months is known as fixed asset. Machinery, once you purchase machinery, are you going to sell that in within a 1 year? No, sir, you are going to use that machinery at least for 15 years, 20 years, right? You are having a machinery, you are having a furniture, you are having a goodwill, right? Goodwill of the business, right? Tangible, intangible assets are fixed assets, right? So as I said, so fixed assets are those assets which are there in the business for more than 12 months. Example I give you: machinery, furniture, plant and machinery, then goodwill, right? Every kind of machinery and furniture are fixed assets. So what is current assets? So assets which are there in your business up to, or I can say less than 12 months, not up to. So current assets are there in the business for less than 12 months is known as current asset. I give you example. Debtors are there, bill receivable is there, right? Then I give you example of stock is there. Sir, I manufacture this pen now. So what is purpose behind manufacturing this pen? For selling, no? I'm not going to hold this in my hand. Sir, day after tomorrow, or I can say in 2 months or 3 months, I will be going to sell this pen in the market, right? So I'm not going to hold this pen for more than 12 months. I have produced this pen for selling purpose only. So any asset which is there in the business for less than 12 months is current asset. So what is current liability, sir? So liability which are payable within a period of 12 months. For example, sir, creditors, bills payable, bank overdraft, all these payments I need to do within a period of 12 months. That is known as current liability, right? So what I need to do, I need to add all fixed assets, I need to add all current assets, then I need to subtract current liability. I will be getting what? So I will be getting answer for capital employed, right? Sir, after deriving at answer of capital employed, sir, I need to apply normal rate of return into it. So what is meaning of normal rate of return? Sir, suppose Sanjay, I gave you Gokul and Sanjay, I am giving you 5 lakh rupees, right? So 5 lakh rupees I am giving you, and you are going to put that into your business. So that 5 lakh rupees is nothing but your capital employed. So what is capital employed? So capital invested by you in your business, that is capital employed. So if it is not given in the question, then I need to find out that. How to find out? So fixed asset plus current asset minus current liability. I can find out my capital employed. Now, so what is your expectation, Sanjay? How much profit you are going to get on this 5 lakh? How much your expectation, Gokul? How much profit you will be deriving on that 5 lakh? What is your expectation if you invested 5 lakh rupees into business? What is your expectation? How much profit you have to earn over and above 5 lakhs? But obviously, you are thinking that, sir, first of all, I need to recover my 5 lakhs, no?
Yes.
right? So that is correct. So over and above that, how much profit you are expecting? Over and above 5 lakhs. Any example? Any example? Any guesses?
At least 7 or 8 lakhs.
7 or 8 lakhs. So you mean to say total 7 or 8 lakhs you are expecting, right? So it means after subtracting 5 lakh rupees of initial investment, your earning is 3 lakh rupees somewhere, right?
Yes, sir.
Right. And if I ask you in terms of percentage, then how much percentage of return you are expecting? See, what you will be going to do that. So what you will be going to do, sir, you will be analyzing same business in your locality. Suppose we started some evening snacks corner. Sanjay, Gokul, and me. We both are planning of having a evening snacks corner, right? Sir, if we are planning to start a evening snacks corner, we invested 5 lakh rupees into the business. What I will be doing? Sir, I will be analyzing the market. I will be analyzing the market. I will be checking out, sir, the person who is there in the market in my same locality, how much return he is earning, right? For example, one person is there in front of us. He is selling, sir, I can say dosas, idli and dosa he is selling, right? And he is earning 10% around on his investment. He is earning 10%. Sir, we are doing business in same locality, and we are doing a business of substitute of I can say dosa and idli substitute. What will be the substitute for dosa and idli in evening? Yes, Sanjay, Gokul, what do you think? What will be the good substitute for dosa and idli that we can sell?
What? Sorry, sir. What is?
The person who is there in front of us, he is selling idli and dosas, right? And on his investment, he is earning 10% return. So what I'm asking you, what will be the substitute? Means what we can sell. We cannot sell dosa and idli now because that person is selling. So what we can sell in place of dosa and idli? Any suggestions? Any ideas? Yes, Sanjay? Gokul?
For chat items.
Yes?
Chat.
Yes, we can sell chat, right?
Anything
Chat.
instead of dosa.
Yes, chat. We are thinking of planning of selling a chat, right? So, sir, if that person is earning 10%, now we are in same industry, we are in evening spot business, right? So I am also expecting that I should be earning 10%, right? Suppose Sanjay, you are thinking, sir, sir, you gave me 5 lakh rupees. If I'm not starting this evening spot business, I would have been invested this 5 lakh rupees into the bank, and bank would be giving me how much? 12% return, right, on my 5 lakh rupees of investment. Gokul, you are thinking same. Sir, if I'm not starting this business of evening snacks, I would be investing that into the bank, and I will be earning 10%, 12% return. So the expectation of earning return is known as normal rate of return, right? What you are expecting that, so the 5 lakh rupees that I have invested into business, on an average, I should earn 10% or 12% on that investment. That is known as normal rate of return, right? So if I'm invested 5 lakh rupees into the business and 10% is my normal rate of return, so 5 lakhs multiplied by 10%. So my answer is 50,000, right? So 50,000 is my normal profit. Sir, normally I should be earning how much? So normally I should be earning 50,000 rupees of profit. But suppose you earn today in your business, you earn 60,000 rupees of profit. Normally I should be earning 50,000, but actually you are earning how much? Actually you are earning 60,000 rupees. So 60 minus 50, 10,000 rupees you have earned more, and that is your super profit. Yes or no? Getting? Understanding this? So formula of super profit is average profit minus normal profit. So averagely I should be earning, or averagely, or you can say average profit is nothing but your actual profit, you can consider. So you earn how much? You earn 60,000 rupees, but your expectation was to earn 50,000 only, right? So 60 minus 50, 10,000 rupees that you earn more is your super profit. Now the question is how to calculate normal profit. So for calculation of normal profit, I require capital employed. So capital employed is nothing but amount invested by you in your business. Simple. Sir, if it is given in the question, no issues. But if it is not given in the question, then I need to calculate capital employed. So how to calculate capital employed? So formula is fixed asset plus current assets minus current liabilities. Right? You can get capital employed answer. So what is normal rate of return? So normal rate of return is always given in the question. You have to just apply it on the capital employed. Right? So normal rate of return is nothing but normally how much return expected by you from your business, from your investment. Getting Sanjay, Gokul, getting this? So that is nothing but calculation of super profit. First of all, we have to calculate super profit. Once you calculate super profit now, you can calculate goodwill by method called purchase of super profit method. Purchase of super profit. So what is purchase of super profit? See the formula. So goodwill is equal to super profit multiplied by number of year of purchase. Simple. So that we did in the average profit also, no? So formula in the case of average profit method, formula was goodwill is equal to average profit multiplied by number of year of purchase, right? Similarly, here goodwill is equal to super profit multiplied by number of year of purchase. Understanding, right? So we can, this is method, first of all, purchase of super profit method. By this we can calculate goodwill. So first of all, I need to calculate super profit, then I need to multiply it by number of year of purchase. I can get answer for goodwill. Getting, so if I summarize here, so first of all, I need to calculate super profit. So how to calculate super profit? What is formula? Average profit
minus normal profit.
minus normal profit. So how to calculate normal profit? Capital employed multiplied by normal rate of return, right? So once you get to know answer of super profit, you can put into the formula of goodwill. Goodwill is equal to super profit multiplied by number of year of purchase, right? Okay, we'll discuss questions on it, then you will get more clarity. So apart from that, so there is another method called annuity method. Goodwill, so there is under the main method of super profit. You have calculated super profit, then you have to apply annuity. So what is annuity basically? What is annuity factor? Have you know about this? Have you studied in the maths? Present value, future value? Have you studied? Okay. So what is annuity? What is present value? What is future value? Sir, today I am having 50 rupees in my pocket. Right? 50 rupees in my pocket at present. Sir, the value of this 50 rupees will not be same in the future, na? After 2 years. It will change, na? So today's 50 rupees will change in the future or not? But obviously it will change. Similarly, if I am saying, Sanjay, if I am saying you will be getting 2000 rupees after 2 years. Gokul, I am saying you will be getting 3000 rupees after 2 years. Right? Sanjay is going to recover 3000 rupees, 2000 rupees after 2 years, and Gokul, you will be getting 3000 rupees after 2 years. Sir, you are interested in knowing value of that 2000 and 3000. What is value of that 2000 and 3000 rupees today, right? What is the true value? What is current value, right? You are interested in knowing that or not? But obviously, sir, yes, I am interested in knowing the 2000 rupees and 3000 rupees that I am going to get after 2 years. What is the true value of today? What is true value of that money today, right? And that is known as present value. So what we have to do here, how to calculate goodwill? Sir, goodwill is equal to super profit multiplied by present value annuity factor. So this factor basically given in the question, right? So that is nothing but what is value of 1 rupee in the future. So if I am saying you after 5 years you will be getting 1 rupee, now. So what is value of that 1 rupee today? That can be around 0.01. That can be 0.52, right? So today's 0.52 becomes 1 rupee in the future after 5 years. So that factor I need to apply here, and I can get the super goodwill answer, right? You will get more clarity afterwards while solving the question. Just remember your formula. Goodwill is equal to super profit multiplied by present value annuity factor, right? That some factor is there, sir. So that factor is nothing but, so what is value of 1 rupee that you are getting after some period of time, for example 2 years or 3 years after, what is value of that 1 or 2 rupees today, So that is nothing but present value factor, right? Now, so next is capitalization of super profit. So what is capitalization of super profit? What is capitalization of super profit? Simple, simple. So capitalization of super profit means what? So suppose you are earning, Sanjay, Gokul, you are earning some profit at 10% capacity. As I said you, your normal rate of return is 10%. Sir, your normal rate of return is 10%. At 10% of normal rate of return, your profit is 10,000 rupees. So your profit is how much? 10,000 rupees. At 10% of normal rate of return, your profit is 10,000 rupees. Sir, if I am saying your normal rate of return is 100%, if I am saying, sir, your normal rate of return is 100%, so what will be your profit? What will be your profit? Gokul? At present, your normal rate of return is 10% and you are earning 10,000 rupees of profit. If your normal rate of return is 100%, what will be the profit amount?
10.
What you can do? You can do cross multiplication, no? 100 multiplied by 10,000 divided by 10,
10.
right? So answer is
1 lakh.
1 lakh. Sir, this is nothing but calculation of goodwill by super profit method. The capitalization of super profit method. So what is capitalization? So capitalization is nothing but you are adding your profit up to your 100% level. So expectation of profit at 100% capacity is nothing but goodwill by capitalization of super profit method. Once again I am repeating. Sir, at present you are earning 10,000 rupees of profit, Gokul and Sanjay. At normal rate of return 10%. So what will be the profit at 100% normal rate of return? So that is cross multiplication, you get 1 lakh rupees. So finding this 1 lakh rupees of profit at 100% capacity is known as goodwill, right? Goodwill by capitalization of super profit method. So what is formula? See the formula. Goodwill is equal to super profit divided by normal rate of return multiplied by 100. So formula is super profit divided by normal rate of return multiplied by 100. So this is the formula for calculation of goodwill under capitalization of super profit method, right? So see, you will be getting more clarity only after solving the question. So I'm just theoretically I'm just giving you the formulas, but you can get that afterwards. You can get clarity afterwards. So whatever we studied so far, see, I'm just putting here regarding super profit. So first of all, how to calculate super profit, that is important. Then, so there are methods. First method is goodwill by purchase of super profit. Then we studied capitalization of super profit, now as well as annuity factor wala. See here, annuity method, then capitalization of super profit. Okay. So what is formula for purchase of super profit? So goodwill is equal to super profit multiplied by number of year of purchase. So what is formula? Goodwill is equal to present value, goodwill is equal to super profit multiplied by present value of annuity factor. So what is that? We will discuss in the question. So what is capitalization of super profit method formula? So goodwill is equal to super profit divided by normal rate of return multiplied by 100. Right? This is the formula. And how to calculate super profit, sir? How to calculate super profit? So super profit is equal to
Average profit minus
average profit minus normal profit. So how to calculate normal profit?
capital employed into normal
Capital
rate of
employed into normal rate of return. Yes. So what I'm expecting at present from you, just to remember formulas and concept. So how to apply that in question we'll discuss in the next session, right? Okay. And sir, there is one more last method that is known as capitalization method. This method is different now. It is not related to super profit. It is altogether different. Capitalization method. So for capitalization method, what is formula for goodwill? So goodwill is equal to total capitalized value of the business minus actual capital employed. So it is nothing but we have to calculate the value of business minus capital employed, and that is nothing but goodwill. So what does it mean? So it is meaning is simple. So when you started a business now, at that time you invested 5 lakh rupees, right? With the help of 5 lakh rupees you started a business, right? So so what is today's market value of business? That is nothing but value of the business. So you are running this business over a period of 50 years, right? And today's value of business is somewhere around 5 crore, right? And your investment where? So what is market value of your investment? So market value of investment is only 2 crores. It means the 3 crore rupees that you are having more value of your business is just because of your goodwill. Getting? Sir, current value of your business in the market. So what is meaning of current value of business in the market? So current value of your business in the market means if you are planning to sell your business in the market today. Suppose I am planning to sell my business in the market today. So how much I am expecting? Sir, I am expecting 5 crore rupees from the investors, right? If Sanjay and Gokul are interested in buying my business, you should be paying me how much? You should be paying me 5 crore rupees. That is value of business. That is value of business. Minus capital employed. So what is capital employed? So capital employed is nothing but amount invested by me, right? That can be a fixed asset, current asset, right? So the total of fixed asset, current asset that I invested over a period of time is having a 2 crores, and I'm expecting if I sell business today to the someone, to Sanjay or Gokul, I'm expecting 5 crore rupees from you. So 5 crore minus my investment, that is 2 crores. So I'm expecting what? I'm expecting you should pay me 3 crore rupees more. And that 3 crore rupees that I'm expecting from you to pay more is nothing but goodwill, right? That is simple meaning of this capitalization method of goodwill. Now, so how to calculate now? How to calculate that capitalized value? How to calculate capital employed? So how to calculate capital employed that we know now? So capital employed is equal to fixed asset plus current asset minus current liability, that we know. Sir, but how to calculate that capitalized value of business? See the formula. So capitalized value of the business, right, is equal to average profit divided by normal rate of return into 100. So formula is average profit divided by normal rate of return multiplied by 100. Getting? Sir, goodwill formula for capitalized method is capitalized value of business minus capitalized value of business or value of business minus capital employed. How to calculate capital employed? Fixed asset minus current asset, fixed asset plus current asset minus current liability. So how to calculate value of business? So value of business is equal to average profit divided by normal rate of return multiplied by 100. Sir, students get confused in this method, capitalized method, and this method, capitalization of super profit method. So both methods are different. So capitalization of super profit fall in the category of super profit, sir. And this method is what? So this method is capitalization method. Both methods are different, right? So formula is also different. Capitalization method formula is goodwill is equal to capitalized value of business minus capital employed. So how to calculate capitalized value of business? Average profit divided by normal rate of return into 100, right? Sir, in this method, capitalization of super profit, what is formula? Goodwill is equal to super profit divided by NRR into 100. Getting? See, I'm just expecting remembering of formulas here, remembering of concept. We will apply the same in the next class, right? Right, Sanjay, Gokul?
Yes.
Yes, Gokul, are you there?
sir.
Understood?
Yes, sir.
Okay, good. So give me an answer for this. Super profit is difference between super profit is difference between
Average profit and normal profit.
average profit and normal. Absolutely correct. So average rate of return of similar concern is considered as average rate
Average
of
profit.
return, average profit or normal rate of return. I gave you example now. We are
Normal
planning.
rate.
Yes, we are planning to start evening snack, right? So there is one person who is standing in front of us, and he is selling what? Dosa and idli, and he is expecting 10%, right? So that 10% is nothing but normal rate of return. Average rate of return of similar concern, na similar concern means similar business. So normal rate of return is correct answer. So when average profit is 25,000 and normal profit is 15,000, super profit will be
10,000.
yes, correct. Sir, which of the following statement is true?
Goodwill is an
Goodwill is
intangible.
intangible.
Goodwill is intangible asset. So which of the following statement is true?
Goodwill is an
Goodwill is in which of the following statement is true? Goodwill is intangible asset. Goodwill is current asset. Goodwill is fictitious asset. Goodwill cannot be acquired. So goodwill is intangible asset.
Intangible, sir.
Yes. So firm's goodwill is not affected by business goodwill is not affected by
Not
not affected by. This is reputation, no?
Location of
reputation of
Sir, correct answer is none of the above. Why? Sir, place of the business, location of the business matters a lot now. Location, then reputation of your business, but obviously, sir.
reputation.
Then customer service. Which kind of customer service you are there? If you are available for customer every time, so it will basically will increase the goodwill of your business in the market, right? So all the three factors are important. Location plays important role, sir. In which location you are running your business, you are doing your business, right now, sir. If you are doing a
yes.
business of some fancy items, right, and which is you are doing this business in village, so people are not interested in that, right? So that business will be will boost in the you can say in city areas, right? So location of the business plays vital role, reputation plays vital role, and customer also plays vital role. So firm's goodwill is not affected, so not affected by none of the above. All the factors are important, right? So which one of the following is shown first when the assets are arranged in order of their liquidity? So what is liquidity?
Cash
So
in hand.
liquidity means amount which is readily available.
Liquid.
Yes, liquid cash, cash which is available readily. But obviously,
Cash
sir,
in
cash
hand.
in hand. Yes, but obviously. In case of partnership, the act of any partner is in case of partnership, the act of any partner is binding on all partners, binding on that partner only, binding on all
On
the
all
partners except that
partners.
partner, none of the above.
All the
Yes, sir,
partners.
because they are jointly and severally liable. You might be heard this word. The partners are jointly and severally liable. If we three are the partners, and if Sanjay is conducting any activity on behalf of the partnership from business, sir, for act of the Sanjay, all of us are responsible, right? So in case of partnership act, any of the partners for any act of any of the partners, so binding on all the partners. That act is binding on all the partners, right? Understood?
Yes.
Any question, any question, any doubt so far regarding today's class?
No.
Okay.